This is our look ahead to Thursday's key events. We start with central banks, three of them with interest rate and policy decisions due tomorrow. The ECB expected to keep rates unchanged at record lows at its last policy meeting of the year. At his news conference later in the day, President Mario Draghi likely to maintain the bank stands ready to intervene in bond markets provided a request is made. Bank of England also likely to keep rates on hold. Economists polled by Reuters also expecting the bank to switch off its printing presses until early next year. Finance Minister George Osborne said today growth will be weaker than expected, meaning painful austerity measures must be extended by a further year into 2017 and 18. Dominic Johnson of Somerset Capital Management says he's looking to politicians rather than central banks to take more action.
We're expecting more of the same. We've got various other sort of US central bank convenings over the next couple of days as well. I think we're expecting a bit more quantitative easing from that side. You know, it's going to be more of the same. One of the things we're all hoping for is that the politicians can start being a bit more aggressive about supply side reforms, so liberating the work market. The Europeans can come together when it comes to looking at how they can regulate their banking union. This is very important, and the US can address the issue of the fiscal cliff.
No change on the cards either for the Reserve Bank of New Zealand. Economists polled by Reuters not seeing any rate increase there until at least June of next year. On the data front, revised Q3 GDP numbers due out of the Eurozone and German industrial orders expected to have rebounded in October after September's sharpest fall in a year. In fixed income, France set to auction between 3 and 4 billion euros of bonds at 9:50 London time. On the corporate front, third quarter results due from luxury brand Prada. Back in Q2, the Italian fashion house dismissed talk of a sharp slowdown in spending on luxury goods after it posted a nearly 60% jump in profit. And Mulberry releasing interim results. Goldman Sachs last week reiterated its buy recommendation on the brand, saying it's an under-penetrated brand with top quartile returns versus its European peers. That's our look ahead to Thursday. I'm Axel Threlfall. This is Reuters.